All right, let's talk about today's action with Scott Bauer, CEO of Prosper Trading Academy. Scott, bulls try to make a push. Seems like they're kind of running out of a little gas here, though, with 15 minutes left.
Yeah, little steam maybe coming out of the market here, but, it's not as bad as it was this morning. The overall theme right now, Oliver, I think is actually mixed. Even with yesterday's sell-off and today kind of struggling, there's still spots to me that look like they want to rally. Many of these beaten down tech stocks that have some big gaps to fill on the upside, they look really interesting, really interesting. So I think we're in this give and take marketplace right now, honestly, that anything can happen. I think we're going to remain consolidated. So we may see a move like we got yesterday. May rally half of that back tomorrow, Monday, whatever that may be. And I think we're just in a lot of churn for right now.
Speaking of churn, Scott, we got bonds seeming like they want to get through to lower levels, thinking about the 10-year and breaking down through 3.5, but not getting too far. A little bit of pushback there. Some bond selling today. But it does seem like we broke, at least in the short term, kind of an important area. How are you thinking about this as a trader? Is there opportunity here to pick a direction for bonds, or are you happy to just collect income like we've been talking about with some of our longer term guests that tell us there's a lot of investors who are just happy to see if they can get 3.4?
Yeah, I think that's the way to go. And I think there's some risk actually to seeing rates rising again. I mean, we all like seeing these rates come down just in terms of borrowing, mortgages, et cetera. But, with the Fed coming out it's still almost a month away, 3 weeks away, whatever it is, and the expectation being 0.25%, I think that any surprise would actually be maybe sort of a hawkish tone. Even with all of the economic reports coming out and recession, let's call it imminent, and inflation easing, to me in this bond market, the risk is that rates go higher. The trajectory has been to the downside. On 10-year, we broke that, like you said. We broke that 350 level, almost hit 330, but, that inversion is still as wide as it's been. So I think that's going to be tough. I think it's going to be real tough to see mega buyers coming into the bond market, just pushing rates down much further, just ahead of the Fed, which again, it's still 3-4 weeks away. I think we're going to see a lot of caution right now.
All right. Good setup for us to think about here going into next week. Thanks, Scott Bauer. Appreciate it, sir. CEO of Prosper Trading Academy.